So you want to retire early? Well, that could be a big mistake. Have you thought about retiring early and how you'll actually achieve it? Thinking about leaving your work life behind early is one thing. Having a plan in place to pull it off is another. Retiring early can be one of the most rewarding decisions you ever make, but it can also be one of the most challenging if you're not fully prepared. The truth is, there's more to this process than just reaching a certain number in your savings account. If you don't have a well-thought-out plan in place, your golden years could be anything but golden. In this video, I'll share with you a 14-point checklist you absolutely need to check off before 60 if you plan to retire, and more importantly, how to make sure you stay comfortable and secure through your retirement years. The first thing you need to do is to maximize your savings potential. Yes, we've all heard it before. Saving is essential. But when you're aiming to retire early, you need to go beyond the basics. This isn't just about stashing away a portion of your income. It's about squeezing every possible dollar from your earnings. Look at every expense and identify unnecessary spending. Redirect those funds into your retirement savings. Also, consider tax-saving opportunities, like contributing to tax-deferred accounts. The more you can save now, the more you'll have to sustain you later on. Consider utilizing automated savings plans to ensure consistency. This approach allows you to prioritize savings without the temptation to overspend. Number 2. Eradicate all debt. Carrying debt into retirement is like dragging an anchor behind you while trying to sail smoothly into your golden years. The sooner you tackle this, the better your chances of achieving financial freedom. Prioritize paying off high-interest debts first. Credit cards, personal loans, and even your mortgage if possible. Entering retirement debt-free means you won't need to worry about meeting those monthly payments, which could otherwise drain your retirement funds at an alarming rate. Paying off even low-interest debts reduces financial pressure during retirement. Focus on eliminating outstanding balances to maximize your available retirement income. Next, you need to create a financial safety net. You need a financial cushion that's easily accessible for emergencies or unexpected expenses. This is often referred to as a cash reserve or emergency fund. Having a substantial amount of liquid cash gives you peace of mind and prevents you from dipping into your investments when the market is unfavorable. Aim to have at least 1 to 2 years' worth of living expenses set aside in a high-interest savings account. Make sure your emergency fund is in an account that offers quick access but still provides a reasonable interest rate to grow. 4. Handle major expenses. Before you retire, anticipate and cover any significant expenses before you step away from your job. If your car needs replacing or your roof is nearing the end of its lifespan, address these issues now. Doing so ensures that your fixed retirement income isn't disrupted by sudden, large expenditures. It's all about minimizing surprises and maximizing stability. Consider home improvements that could increase your property's value, offering additional financial security if you ever need to downsize later. 5. Establish a purpose-driven lifestyle plan. Retirement isn't just about financial readiness. It's about having a plan for your time. Too many retirees find themselves feeling lost or without direction once they leave their careers behind. Identify activities, hobbies, or even part-time ventures that will keep you engaged, fulfilled, and mentally active. Having a sense of purpose will help you avoid the emotional pitfalls that many retirees face. Staying physically active can improve overall health, reducing potential healthcare costs. Join local clubs or organizations to expand your social network. Number 6. Define your retirement budget. You might be surprised by how much, or how little, you actually need to maintain your lifestyle in retirement. Sit down and meticulously map out your expected expenses, from housing and healthcare to travel and leisure. Include a buffer for unexpected costs. Understanding your true financial needs will prevent overspending and ensure you don't outlive your savings. Account for annual inflation when estimating expenses, as costs will rise over time. This ensures your budget remains realistic and sustainable. The 7th, test your retirement lifestyle. Before making the leap into retirement, try living on your projected retirement budget for a year or two. This practice run will help you identify any areas that need adjustment and ensure you're truly prepared for the lifestyle changes ahead. Better to discover now that you need to tighten your belt than when you're already living off your savings. Track your expenses meticulously during this trial period. Doing so helps identify areas where you might be able to cut unnecessary costs. Number 8. Analyze your workplace pension and retirement savings plans. If you're fortunate enough to have a workplace pension or group RRSP, it's crucial to understand all your options. Investigate whether it's better to take a lump sum or monthly payouts and how it will affect your overall financial picture. Many plans offer various options, so choose the one that aligns with your retirement goals. Explore options for transferring or consolidating smaller workplace pensions. This can simplify management and potentially increase your investment growth potential. 9. Understand your government pension options. Familiarize yourself with the details of your public pension plans. Whether it's Social Security in the US or the Canada Pension Plan and Old Age Security in Canada, know how much you'll receive and when you should start taking payments. The timing of when you start these benefits can have a significant impact on your overall retirement income. Check for any recent changes in government policies that could affect your pension benefits or eligibility. Staying informed is crucial for accurate planning. The 10th, determine your financial needs. Assessing how much money you'll need throughout retirement isn't always straightforward. Consider your budget, your anticipated lifespan, healthcare needs, inflation, and the lifestyle you want to maintain. Don't just focus on reaching a certain figure in your retirement accounts. Focus on what that figure needs to accomplish for you year after year. Include potential future healthcare expenses in your calculations. As you age, medical costs can become a significant portion of your retirement budget. Number 11. Develop a strategic tax plan. Taxes don't disappear just because you retire. In fact, they can become an even bigger burden if you're not careful. Work with a financial planner to determine the most tax-efficient way to withdraw from your accounts, especially if you have multiple sources of income. By managing your withdrawals, you can avoid paying more in taxes than necessary, allowing your money to stretch further. Consider the tax implications of withdrawing from different accounts. Proper timing can minimize your tax burden and increase your retirement income. Number 12. Pressure test your financial plan. Don't make the mistake of assuming your plan is bulletproof. Put it through the ringer by testing it against worst-case scenarios, market crashes, higher than expected inflation, unexpected health expenses, or a longer than anticipated lifespan. By stress testing your plan, you can identify weaknesses and create strategies to safeguard your financial future. Use conservative growth rates in your calculations, ensuring that your plan remains viable even if the market underperforms in the coming years. 13. Combine retirement accounts for simplicity. If you have multiple RRSPs or retirement accounts, consider consolidating them. Having everything in one place makes it easier to manage your withdrawals, understand your overall financial picture, and reduce the administrative hassle. It's about streamlining your finances so you can focus on enjoying retirement instead of managing paperwork. Review any associated fees before consolidating accounts. Lower fees can significantly boost your overall retirement savings over time. And finally, number 14. Assess your health insurance options. One often overlooked aspect of early retirement is health insurance. Make sure you have a plan that covers your needs, whether it's through a spouse's plan, a private insurer, or a government program. The last thing you want is for a medical emergency to wipe out your hard-earned savings. Research supplemental insurance plans to fill any gaps in coverage. This can prevent unexpected medical bills from derailing your retirement plans. Taking the steps to retire early is no small feat, but by planning carefully, eliminating debt, and stress testing your financial strategy, you can set yourself up for a secure and enjoyable retirement. If you found this video helpful, please give it a thumbs up and subscribe to The Smart Retiree for more insights on how to make the most of your golden years.